Hi, I'm Fred Ruffy with Trade Alert, and today I'm going to talk about expiration and rolling activity. This week's been pretty quiet so far. S&P 500 up 0.15 points, unchanged Monday, up a few points yesterday, down a few points today, basically flat on the week. We might expect a bit more volatility and volume to come in later this week due to the expiration. It's not a futures or quadruple witch expiration, it's an expiration for equity options and ETF options and cash indexes. So we might see a bit more volatility and volume come in later in the week, and some of that volume is going to be driven by rolling activity. A roll is simply a position adjustment where an investor is closing out one position in an expiring contract and opening a new position in a more distant contract. So a roll might happen in the money contract if an investor wants to avoid assignment on that contract, or they might roll to a more distant expiration month on an out of the money contract to salvage any remaining time value and then maintain the same exposure by opening a position in a later month. So some of the largest blocks of equity options that we've seen so far this week have been rolls. An example is in the iShares China Fund, which is ticker symbol FXI. It's trading around 36.50. Monday we saw a massive roll of calls from November 37 calls to December 38 calls. That spread traded for 25 cents more than 60,000 times, so total 120,000 contracts on the trade. They sold to close the November 37 calls at 23 cents. Looking at trade history, those were probably opened in October for about 35 cents, and the trade was working out well. Chinese equity markets were strengthening until elections last week, and then the FXI dropped about 3-4%. So now they're closing that position that they had opened for 35 cents at 23, closing it for 23 cents and opening a new position in the December 38 calls for 48 cents. And if you look at the open interest at that line, it's 103,000 contracts, which is the largest block of open interest in FXI. So take a look at the FXI December 38 calls. Another hefty roll that we saw this week, it was in Marathon Oil, ticker symbol MRO. It's an oil refinery company. What the trade was a November 29, December 30 put spread at 30 cents. And what they appeared to do was to buy to close November 29 puts, about 41,000 contracts, closing those at 26 cents. Looking at trade history, those were probably opened for about 35 cents or 39 cents a month ago, and now they're selling to open a new position in December 29 puts at 56 cents. Finally, research in motion. We saw big rolling activity yesterday in the December 7 calls. Now the stock's at 840, so both those contracts are in the money. The investor is selling to close the November 7 calls, a total of 40,000 yesterday, and opening a new position in the December 7 calls, which are also already in the money and expiring in 5.5 weeks. And they're paying $1.67 on about 35,000 contracts, so that's a big premium purchase in research in motion, pushing open interest up to over 43,000 contracts, which is the largest position in RIM right now in terms of open interest. So take a look at those RIM December 7 calls. So those are the three trades. Expiration, 2 more days left to trade. November 2012 options, equity and ETF and index options, with the exception of VIX options. The November contracts expire next week on Wednesday. So that's all for today. I'm Fred Ruffy, and I will see you next time.